Welcome to You're 18, Now What? Thank you for joining me on this great Tuesday. I'm Dr. Catherine Gilstein, and I am looking forward to empowering you with information about financial literacy and economic empowerment. I will continue to post on the second or fourth Tuesday of the month, but I will be adding to my podcast since I have such great interviews lined up. Today, I am joined by Ryan Rossett, who is founder and co-CEO of Credibly, and he is going to share with us why you should choose Credibly, what it's about, how to get business credit, and knowing how much to borrow. Brian, thank you so much for joining me. Tell us a little
Catherine,
bit about you and how you started.
yeah, first I'd like to thank you for having me on your podcast. Again, my name is Ryan Rosette. I am a founder and a co-CEO of Credibly. Credibly is a fintech small business lending platform. We are based out of Detroit, Michigan, with offices in New York and Phoenix, Arizona. We lend throughout the United States. Basically, what we do differently than what a bank does is we provide access to credit to small businesses, ranging from $5,000 up to $600,000. We decision in less than 4 hours. Typically, we're decisioning within 2 hours, we do mostly same-day fundings. So it's access to very fast capital. We really are focused on the user experience, and to ensure that the customers are interacting with us in a way that they get visibility and transparency into the decision-making process, as well as access to capital that they need to run and operate their business.
That's amazing. And with the amount of small businesses that we have in this country, and it really is a world where people are more so, if they're going to college, they're going to go to college, they're going to get a business degree, but they want to be entrepreneurs, they want to start their own businesses. So being able to fund businesses between 5,000 and 600,000, that's like a real nice niche market for the small business owner.
Absolutely. So, and like where to keep in mind also, like, I would always say, like, if a small business has the time, credit, tenure to go to a bank, go to a bank. The experience at a bank is, what we are going after. So meaning that we are providing a much quicker, more like an easier process to work with us, less documentation. I mean, in fact, all you need is a one-page application and 3 months of bank statements, and that is all we need. So, banks typically will require tax returns and time in business a certain amount and credit scores at certain levels. And oftentimes they could take 90 days to, possibly reject you. So that's where
True.
we think we're, picking at, the banking world, which has 4,500 plus banks in the United States. And we're just going after a certain segment of the business, which is the small business lending side.
And I think a really key point that you bring up is that 90-day mark dealing with a traditional bank. That 90-day mark for a small business can be a make or break situation for that small business owner.
That's exactly right. And surprises come up, in small businesses. Like, when we started the business, we were a small business. Now we're probably a medium-sized business. But like in the sense of we understand how small businesses work. I actually, when I was in law school, I started a small business. I've started many small businesses. So I know the cash flow demands of small businesses and how they, there's payroll, there's obviously rent, there's taxes, there's, a number of different expenses. And sometimes they come at times that aren't opportune for the small business owners, but it doesn't necessarily mean that they don't have a good business, and that's what we're providing access to working capital for. And it's just that. I mean, our terms are typically 1 to 2 years. Our average term is about a year. So it's really just a period of time where somebody needs some money. They have an opportunity to either buy something at a discount to help their business. They can renovate their restaurant. They can add something to create more revenue for their business. Whatever the case may be, that's what we're providing. And really, we're just leveraging their cash flow, because that's all we really look at is their bank statements for the most part, and looking at their average daily balance, negative days in the bank, NSFs, things of that nature to assess the credit risk to us. And then we also make it such that it's affordable to the small business owner. So we want to make sure that the small business owner doesn't bite off more than they can chew, which is, critical to us because like, our inventory is
Absolutely.
money and we want to get paid back. We're a for-profit company, but also we want to make sure that the businesses take the appropriate amount of capital that doesn't affect the way that they operate their business.
Okay, so based on the conversation we're having now, and this wasn't one of the questions, but I'm going to bring it up. What about repeat customers? So if your loans are typically 1 to 2 years and you have a small business, let's say I come to you, I need a small business loan, I can get inventory at a discount, I want to do it now. I pay back the loan 3 years, I come back to you. Do you have
That's
situations like
we
that?
have that's which is a sign of like I would say businesses or our customers actually liking the product that we offer. They come back. I mean, we have a 40% retention, so
I can
meaning that
definitely see
they
that
come, we
return.
provide, yeah,
Absolutely.
yeah, we provide the working capital. They pay us off. They come back for additional money. It's just it's something that,
Mhm.
um, and those are great customers to us, just because like and another thing I didn't mention is like, we'll do businesses that are in time if they've been in business for as short as 6 months. So that's just an example of like, but we do risk-based pricing. So if you've been in business 6 months and maybe you have a 550 FICO score, your pricing is going to be reflected in so much that it's taking on a little bit more risk than, let's say, a doctor who has been practicing for 20 years and has very stable cash
Absolutely.
flow. They're
Mhm.
going to get a more favorable pricing. But that's just, that's how we typically work.
And having those repeat customers is definitely beneficial for both you and them. They know what they're getting. They've enjoyed the product before. You were able to help them out before. You'll possibly be able to help them out again. So I can definitely see repeat business. That's amazing. That's really great. What about business credit? So what about establishing business credit? So let's say, you have an LLC, you opened it up and it just sat there just in case. And then now you started a business. So you have the LLC for, I don't know, 5 years, but you only have the business open for two. Like, how does that play into building business credit?
Yeah, so we report to the credit bureaus. So, if you're a good paying customer, we report, and if you're not a good paying customer, we report as well. So like, but you can strengthen your business credit by such that you can actually maybe go to a bank in a future date, or you could take a loan from us and apply for an SBA or whatever the case may be, because those take oftentimes longer to bring to fruition. So it's there's many different ways that people use our capital, but it's really purely working capital. So I mean, that's the way I kind of view it. And when small businesses, they all need it. We need it.
Mhm.
I'm not going to say your business in the podcast world, but like in all businesses require some form of working capital, or
Absolutely.
just a float to pay their bills. And that is what we are. And we really are looking at cash flow. So if you have a good cash flowing business, meaning you're holding a fair amount of money in your average daily balance, um, that helps. And so when and certain businesses have what we call like lumpy cash flow. There's also seasonality. So I
Seasonality, those ebbs and flows in certain
yeah,
businesses that are seasonal. Yes.
yeah. So I mean, you can look at certain businesses. I live in Detroit, like an air conditioning repairman in Michigan in the winter isn't going to be busy. Okay, but that is what we account for, and we look at that.
Mhm.
So it's not we don't necessarily penalize the small business owner because of that, but we just price it in knowing that they may be going into slower months in the wintertime, given the nature of their business.
I mean, it's definitely important to look at the year over year. So, and then you can see what those trends are for that business.
Yep.
Um, but I think
And
as far as
I
the
would just
niche,
add
it's
like I
really
would add
great.
just like
Sure.
yeah. So we look at like year over year, but we also look at month over month, like because there
Hmm.
is seasonalities on the months oftentimes as well. And just using the example of like HVAC or an ice cream store in Alaska, or
Hmm.
whatever it is. Like there's seasonality to it. So we just like look at that over a month. And so if they're having a very strong summer and they apply for a loan with us in October, and we have to look at the forward months as well, like when they're paying us back, what that looks
Hmm.
like. So, and our models all like sort of have a projected cash flow based on industry types, based on geography, and we use a
Hmm.
ton of artificial intelligence and machine learning to give us like this type of information.
No, that's great. So how often does it happen where someone comes to you to borrow and you need to figure out how much they actually need to borrow? Because sometimes you get the client that says, "Well, I don't want to borrow too much." And then you get the client that, overreaches and says, "I really need this much." And they look at the model and they're like, "Well, wait a second, I think you could get by with this." How do you
Yeah.
navigate that?
So what we do is we provide the customer with what we will a maximum approval. Okay. Now
Okay.
they can, and it may not meet their threshold. So they may be asking for $250,000, but we approve them for 100,000. They can certainly, it's an offer, so they can reject us,
Mhm.
or they can say, I'll accept $100,000 under the terms we offer. And it's but like I said in the beginning of this conversation, it's important to us that we provide them the working capital that we believe that, and it's based on our evidence, it's based on our data, that they can afford. So what
Mhm.
we call it a like affordability rate. So it's what the customer can actually afford to service the loan that we're providing them. So and not impact their cash flow to a point where they can't operate their business, or puts them in a worse position than prior to taking the loan from us.
Oh, absolutely. You never want to put somebody in that position, especially with a small business. Um, what about, you brought up some interesting stuff about yourself and your background and having the law background. How does your law background help you with this business and coaching people to get them the loan that they need?
Yeah. So I would just say like my law degrees helped me in my life. Just I've never practiced law. I'm a lawyer. I took the bar exam, but I never practiced. I but just understanding the laws, and there's so many different parameters, even in like what
Mhm.
we do from a lending perspective and laws, and there's there's so much to know, and we have a general counsel, we have multiple lawyers on our team, but so I don't necessarily exercise my legal expertise, and I don't think it's that expertise at this point, because I've never really practiced. So I want to be clear.
Mhm. You were
I wouldn't
busy
trust.
starting
I wouldn't trust.
companies.
Yeah, yeah. I wouldn't trust
You were
myself
busy
with
starting companies. That's why.
my legal opinion, but it just it does help me from a business perspective, just to navigate any legal hurdles that potentially we come across, and we do come across lots of legal hurdles. So
Mhm. I can definitely imagine that, especially with, lending and banking laws and regulations is pretty strict. So
yep,
a lot of guidelines to follow there.
absolutely.
So you are co-founder of Credibly. So what's your expertise on the side of the business and what's your partner's expertise on the side of the business?
Yeah, that's a good question. So what I largely oversee is the revenue, technology, product, and sales. So marketing included in the sales. And so we have a great team of executives, but that's largely, so I'm more on like new origination, revenue creation, things of that nature. My
Mhm.
partner, Eden King, he's more on the operation sides, legal. He's a lawyer as well.
Mm.
We both kind of oversee legal, but he's more on the legal side. And then collections portfolio. So that's like how we kind of divide and conquer. But we both are very involved in each other's business, but we have like a clear sort of definition in terms of what we do, and we make sure we each understand what we're looking at or decisions we're making that may or may not affect our business. So that's important, and that's like any good partnership. it's just, having good communication and transparency and things of that,
Absolutely.
just common
Knowing your
things.
strengths, knowing your weaknesses, where you
That's
can
right.
pick up, where they can pick up. Absolutely. That's so, so important in business. And I think a lot of times in small business, when people start out, they think they can handle all of it. And I think that's the biggest mistake, because you have to know what you know and know what you don't know. And I think that's a huge part of small business as well, is
Yeah.
knowing.
The problem also, I mean, when you start a small business, you do it all. So, and that's
Mhm.
the, so, and you learn sort of quickly what you like to do and what you're good at. And typically what you like doing is what you're better at. And what you don't like doing is, you tend to find that you're not as good at. So,
Mhm.
and I enjoy, uh, on a personal level, I enjoy, like, the technology. I enjoy product development. Um, I enjoyed sales. I mean, just like in general, like revenue creation. But that in itself won't cover like the risk aspect of our business, or,
Mhm.
so we have a very large data science team that is, very, and I didn't include that in what my partner oversees, but that is like, very much
Mhm.
what he's involved in. But both of us in a lending business, like just managing risk is uh, paramount to what we do. So it's just
Oh,
a,
huge component.
yeah,
Absolutely.
yeah.
Definite,
So
definite huge component. Um, mm, how long has Credibly been around? And what gave you the idea to even start it?
yeah. So my background, so I was in, I started by saying when I was in law school, I opened a coffee shop in this town called Birmingham, Michigan, which is just like a very nice little downtown area outside of
Mhm.
Detroit. And at the time I went to school at University of Michigan. And there was like 18 coffee houses that, Starbucks wasn't anywhere. Starbucks, I
Mm.
think, had 150 stores at that time, and mostly in like Seattle and the Pacific Northwest. And so I had this, what I'd say, great idea of opening a coffee shop in downtown Birmingham when I was in law school. So that was the start of my sort of entrepreneurship. And then um, from there, I was in real estate development for 15 years, and then I was in using my real estate background, bridge loans. So we were doing short-term bridge loans, 1 to 2 year bridge loans on income-producing properties. And this is kind of like between 2007 and 2009 when the Great
Mm.
Recession hit.
Mhm.
And then this business kind of came to mind as like small businesses and their inability to access credit. And it just, and it never really rebounded. When you think about like a bank with our average loan size of 65,000 dollars,
Mhm.
banks aren't equipped to do a $65,000 loan. So they're it's too small, it's too much
Right.
paperwork. They don't
Not
charge
worth
enough
it.
for the risk.
Absolutely. Mhm.
So, so that hasn't really changed. And the demand for the small businesses in the United States is loaded with, private small businesses.
It's
So,
just grown. So better
yeah,
for you. Absolutely.
yeah, yeah. So,
Mhm.
and, so banks are, not necessarily, you know, they are our competitor, but I don't view them as a competitor. And so I just think, the opportunity kind of started, and we, like you kind of said, we wore all the hats. We were underwriting deals, and I'm not an underwriter by training, and but we
Mhm.
were underwriting deals, we were originating deals, we were
In the
servicing them. I
beginning,
mean,
yeah, in the beginning, you need to do that, but there's a certain point where you get to in your business where you realize, okay, wait, I can't do it all. I need to bring someone on, and now's the right
that's right.
time.
Yeah, that's right.
So,
And so and like learning to delegate was something that I had to learn, and it didn't come natural to me. And but it's something that is it's something you need to do in order to
I
scale
don't,
any business.
yeah, I don't think delegation is natural to any entrepreneur.
Yeah,
I really don't. It's definitely a learned skill,
yeah.
and definitely takes time.
There's no doubt. So, and because
Hmm.
you oftentimes, I, in the earlier days, I would always say I can do it myself, or I know if I do it myself, it will be the way I want it, whether it was right or wrong, it was the way I intended it to be, versus
Mhm.
now allowing so many people to do what they do that are better than what I do or could
Mhm.
do. And it's really like sort of uh, it's a great feeling to kind of release yourself of like of doing all the mundane tasks and allowing very competent people to step in and make the business scale.
Definitely. I think it's a huge component. But I think I think Credibly is great, and I kind of agree with you. I don't think the regular bank is your competitor because of what you do and what you provide for small businesses. And I think it's really important. And like you said, the banking world has not changed that much, but small businesses are just growing and growing at such a rapid pace. And with the advances in technology and AI and all of the resources that we have available, like why would I work for somebody else when I can work for myself and do what I love when I want?
Yep, that's exactly right. And so,
Mm.
and that's what that is the idea. And like even like out of the pandemic, so many businesses started up during the pandemic.
Oh,
And
absolutely.
so, and so those are, those are all new businesses that we can finance in, the future. So, yeah, I mean, it just, so long as the economy is the economy, it's not to say the economy is great right now. It's unclear as to where it's going, but like on the same token, we factor that in, and it's based on industry types. Certain industries do well, and we'll scale into those, and certain industries don't do well, and we'll scale back. And that's just the nature of what we do.
I think it's the nature of any business is that there's ebbs and flows in every industry, and it's just a matter of what those ebbs and flows happen to be right now in the economy we're in. But it does
Yep.
change over time, and I think if you stick with it long enough, it'll come back up, whatever industry that is. But there is a lot of potential for small businesses out there and what you're providing, and I think it's actually an amazing service. I love focusing on the small business owner because sometimes the banks are just too big to care, which is
Yep.
sad. But
Yep.
mhm,
And that's one of our core values is we care, and we do
mhm.
care. So we care about our customers, we care about the employees, like we try to do the right thing for our customers.
Yeah. Anything else you want to add for our audience?
No, no. I mean, I just, like if there's like, any like interest, our application is really quite simple. And, the best part about like I think what we do is like we provide answers very quickly. So if you're declined for some reason, you'll know very fast. And, sometimes a quick no is just as good as sometimes a slow yes. So I think that's important. And again, the transparency around it. But you can find us at credibly.com, and our application again it's all done online. It's very easy to do.
That's great. And then one last question. So if you do get somebody and they are declined, and like you said, you do usually do answers within 2 to 4 hours. Um, do you go that one step further and have a conversation, with that small business owner and say, hey, we did decline you. These are the reasons why. I think if you take these next steps over the next 3 to 6 months, we could revisit or something like that.
We do. We provide the explanation as to why.
Hmm.
Oftentimes, some of them we can't really help. It could be, they could be not a United States citizen. Like we only lend to like U.S. citizens, for obvious reasons. Like, or they don't have
Right.
a business banking account. We don't lend to
Hmm.
consumer banking accounts because of consumer laws, like so the
Right.
CFPB. So there's certain things that assuming we do provide the reasoning for our decline. What they choose to do with that information is
Hmm.
out of our control. We then
Of
obviously
course.
continue to market to the customer and hope that they can come back at some later date if they corrected whatever it was the reason that they were declined.
Hmm. But yeah, I think, simple, straightforward, one page application. Application is online as well.
Yes, everything's online. So
Mm. Excellent. Thank you so much, Ryan. So credibly.com, reach out. And remember, one size does not fit all for everything. So visit my website, set up some time with me to help create a personalized action plan based on your current financial situation. Be open to learning, be open to listening, ask questions. What more do you want to know? Remember, be invaluable for what you share, not what you know. See you next time on Your 18 Now What, where you could always find the latest podcast episode to listen to, follow, share, and subscribe. Thanks for joining me. I appreciate you.